Click the bell icon to get latest videos from Ekeeda.
Hello friends, myself Professor Uday Bhukre and now I am welcoming you on your own YouTube channel Ekeeda. Friends, if you are watching my video for first time, I request you to subscribe to our channel Ekeeda and also press bell icon for your latest notifications. Friends, today we are going to learn for CA Intercourse Advanced Accountancy, topic name Internal Reconstruction. We are going to learn theory of this topic today in today's session. Let us go ahead with the theory. Friends, now you just imagine there is a company which is loss making. If company is making losses, it will be debited to P&L account, we know. All those losses get accumulated in your P&L account and that debit balance of P&L account will be shown in the balance sheet on the asset side, which is a fictitious asset. Now think that if company is incurring losses year after year, the point will be reached where you cannot carry on that debit balance of P&L account. You cannot continue with those losses. That burden on the head should be removed. Otherwise, your company will actually go in liquidation. If company is doing well and if directors think that company can perform well, then they can introduce the scheme called as the internal reconstruction. Friend, in internal reconstruction, we'll try to bring our sick company on a profitable track by changing the values of assets and liabilities to their actual values. Here, efforts are made so that your liabilities will reduce their amount and some profit get generated, and that profit will be utilized to write off your fictitious assets which are standing in the balance sheet and also to write off your debit balance of P&L account. So it is basically a scheme of readjustment of assets and liabilities, whereby you will try to bring your loss-making company on the profitable track. In reconstruction, shares value are also changed. We can even change shareholders' right. Shareholders' right, I mean to say, earlier shares are of 10% preference shares. In future, they will be a 12% preference shares. While doing so, we may expect some sacrifice from the preference shareholder. In internal reconstruction, your shareholders also have to sacrifice their claim in our company. There will be a change in the right of the shareholder. That is, preference shareholders might be earlier they are getting 10% dividend. In future, they will be agreed to pay 12%. In return of that, we may expect that some amount of preference capital should be waived so that profit will be generated. So there is an adjustment with the preference capital. Same can happen with your equity share capital. Paid up value may be 10. Now in future it will be made to the 7, like that. So your liabilities are tried to get reduced so that some profit get generated, and with that profit we will write off our fictitious assets which are not supported by any tangible transaction. The main object of reconstruction is to reorganize the capital. To reorganize the capital means what? Capital structure is reorganized by changing their face values, by changing their paid up values and on. Also, the main object of internal reconstruction is to make the adjustment with the creditors or your money lenders. So they will be requested to waive some amount in favor of company, and that waived amount will become a profit of the company, with the help of which our losses can be set off. And friends, such process of internal reconstruction is carried on so that company will be brought back to the profitable track without being liquidated. Friends, when your company is not doing well, there are two options. Firstly, you close the company. Closing the company is always the last decision. If company is not doing well and if they think a future is dark, then it is very wrong to continue with that company. That time that company get liquidated. However, if directors are of the opinion that worst scenario is over and company have a bright future, they can take an advantage and they will try to implement the scheme called as the internal reconstruction. तो एक बहुत ही अच्छा scheme है to bring your loss making company to a profitable track. We are actually managing the balance sheet here so that my balance sheet will show true and fair view. Earlier, my balance sheet must not have shown the true and fair view because to hide the losses, I might have changed the values of the assets and liabilities. I will change my balance sheet of the company to the realistic way. So this is the internal reconstruction scheme, and in this scheme, we will see that your assets are brought to the realizable values and even liabilities are get reduced. Okay, so let us go ahead with the next. One more thing I will like to tell you here, students, that when your company is reconstructed and after reconstruction if you prepare a balance sheet, court may give you instruction to include the word and reduced in your name. तो आपके कंपनी के नाम में and reduced ये वर्ड ऐड हो जाता है. Say for example, earlier my name of company is X Limited. In future it will be X Limited and reduced. So and reduced word may be added in your name. In our all solution we will follow that your new company, rather your reconstructed company will be called with the name and reduced also. So and reduced word will be added in your name. In case of internal reconstruction, company will open a special account called as a reconstruction account or capital reduction account. It is a special account opened only in case of internal reconstruction. It will be a nominal account. Nominal account in the sense all incomes or benefits or sacrifices in favor of company will be credited to your capital reduction account. And when you use those profits, capital reduction account will get debited. So it is a temporary account, nominal account which will be opened only in case of internal reconstruction. At the end of internal reconstruction scheme, this account is closed. This account will be closed and there will be a credit balance. There will be a credit balance, or at the most there will be no balance, but there cannot be a debit balance in this account. The reason is very clear. You will write off the assets to the extent of profit generated by you. Whatever profits you have generated, to that extent only you will write off your losses. Losses, I mean to say, the intention of the scheme will be to write off debit balance of PL account, valueless goodwill and any other assets which are mentioned by the question. So we will go ahead with that. Method of reconstruction as far as liability side of your balance sheet is concerned is discussed here. You can see on the screen it is there. The first way of reconstruction is alteration to the share capital. Alteration to the share capital will include two parts. One is subdivision of shares and another is consolidation of shares. Friends, subdivision of shares means share of rupees 100 which was earlier rupees 100, now it is divided in 10 shares of 10 rupees each. So I can say from few to many is a process of subdivision. It is something like one share get converted into 10 shares. Here there is no sacrifice. We are just dividing the share capital as per the scheme of reconstruction. It is what a subdivision. Sir, what is consolidation? Consolidation is opposite of subdivision. Earlier I was having 10 shares of 10 each. But as per the scheme of reconstruction, now they are consolidated and they are brought to the shares of 100. So 10 shares of 10 each now got converted into one share of rupees 100 each. It is called as your adjustment with the capital or alteration to share capital. Next way, which is variation of shareholders' right. Right in the sense, earlier might be your preference shares are gaining dividend of 10%. In future, they may be promised that they will be given a dividend of 12%. I can say it is alteration to the right of your preference shareholder. Earlier, their dividend rate was low and in future they are promised more. In return of that, we may expect that they will reduce their claim for the benefit of the company. Next is reduction of share capital. Reduction of share capital, I mean to say, earlier face value is 100 and now face value got reduced to rupees 80. That means shareholder is waiving 20 rupees in favor of company. That 20 rupees we can use for our purpose. So it is called as a reduction of share capital. Reduction of share capital could be of paid up value also. Not means 100 rupees face value will be continued. But in future, paid up value is reduced by rupees 20. So in future, my paid up value will be called as rupees 80. So company has every right to make a further call of rupees 20. It is possible only on the cooperation of shareholder. Everything will be with the help of cooperation. Otherwise, the internal reconstruction scheme cannot be implemented because it is a scheme of those people who care for the company, who are ready to bear certain loss for the better future, little loss for the better future. Next way is compromise or arrangement. Compromise in the sense shareholders have a reserves, right? Reserves belong to whom? Shareholder. That reserves they will decide to forego. That is a compromise with the shareholder. There will be a compromise with the liabilities. Liabilities are having, suppose my creditors, I need to pay him 10,000. As per the compromise scheme, I may request him to reduce the amount and he will reduce 2,000, say for example. So that is a compromise with our creditors. There will be a changes in the values of assets and liabilities also. That is also a compromise. So compromise scheme is also considered as a part of your internal reconstruction. And friend, lastly, one more method of reconstruction is surrender of shares. Sir, what is surrender of shares? Shareholders will surrender some of their shares in favor of company. Let me explain it, students. Suppose I am holding 100 shares of X Limited. Company is in a deep trouble. I know that मैं कुछ करके भी कुछ होने वाला नहीं है. I may be at a great loss if I don't support the company at this point of time. So I may surrender out of 100 shares, I may surrender, say for example 30 shares in the name of company. Now these shares I have surrendered so that company can settle their liabilities. Company can settle their liabilities. Surrendered shares cannot be reissued for cash. I surrender the shares so that you can pay your liabilities, you can settle your liabilities. So surrender of shares is basically the act by the shareholder whereby he give away his shares in the name of company, and those shares company can use for their liability settlement. So it is one of the way of internal reconstruction, and now I have just completed the methods of internal reconstruction. Friends, now let us understand in detail what will be the entries for the respective arrangement or method. First method I taught you, alteration to the share capital. So alteration can take place in a various ways. First I have mentioned here is subdivision of share. Means share of rupees 100 each, one share of 100 each, now divided into 10 shares of rupees 10 each. So what will happen to my capital? Old capital will get cancelled. Old equity share capital account will be debited. 100 rupees ka capital, say for example 1000 shares. So 100 into 1000 comes to 1 lakh. So equity share capital of rupees 100 will be debited with 1 lakh, and equity share capital of rupees 10 also will be created with 1 lakh. But now the face value, new face value will be 10, and new number of shares will be 10,000. So one share got converted into 10 shares. It is a subdivision. Next is consolidation of shares. Consolidation of shares means what? Earlier I have a 10 shares of 10 each, and now it is getting converted. Now it is getting converted into one share of rupees 100 each. Total amount will remain same. Once again my entry will be old capital account debit to new capital. Old capital will be of 10 rupees each and new capital of rupees 100 each. The change will be only in terms of number of shares. Earlier there might be a larger number of shares. In future there will be a lesser number of shares. In this way, we will do the consolidation entry, consolidation of shares. Importantly, there will not be any benefit or loss to the any party in case of subdivision as well as in case of consolidation. Next possibility is that fully paid up shares converted into stock. बचपन में आपने पढ़ा होगा, you must have learned that fully paid up shares can be converted into stock so that it can be divided in any amount without reference to the face value. So possibility is that shares got converted into stock. So my entry will be share capital account debit to share stock account. Reverse way is also possible. Your stock is getting converted into share capital. So I can say stock account debit to share capital. Importantly, share capital and share stock both will be shown in your balance sheet under the heading share capital. So it doesn't matter whether you are writing share capital or share stock, both will have a place in the balance sheet under the heading share capital. Next is, I told you that next way of reconstruction is variation in the rights of the shareholder. I clearly mentioned that you are changing the dividend rate of the preference shares. Earlier they might be getting lower rate of dividend and now you are promising higher rate of dividend. I can say once again my entry will be old account debit to new. Old might be a 10% preference share capital account debit to new preference share capital, that is 12% preference share capital account credit. That could be a simple entry. Once again, there is no profit or loss here. Amount will remain same, overall amount will remain same, but rate of dividend is changed. Whatever sacrifice they will do, that will be separately recorded as a reduction in the capital. Next part, I told you that reduction in the share capital. Reduction in the share capital. So capital get reduced. First possibility here I tell you, suppose my share is of face value of rupees 100. Reduction of share capital. In that first possibility, suppose my share is of rupees 100 each. So far you paid me 70 rupees. Company decided that now let us make the share of face value of rupees 70 only. Whatever unpaid amount is there, company is waiving that, rather you are cancelling that and you are making your share of rupees 70 only. Now tell me student, will there be any profit or loss to you? No. Earlier also paid up value was 70 and in future also it will be 70, but the only difference will be of face value. Earlier face value was rupees 100 and new face value will be of rupees 70. So I will say 100 rupees share capital account debit to 70 rupees share capital account credit. There is no sacrifice here, but unpaid amount is cancelled. Unpaid amount is cancelled. So in future you cannot make a further call of rupees 30 on those shares. Next possibility, that paid up value of share is reduced. Sir, what is this? Suppose your share is rupees 100 paid. Face value is also 100. Now as per the arrangement of the scheme, your paid up value of share is reduced to 70. Means can I say you waived 30 rupees in favor of company? So from company's point of view, it is a profit. It will be credited to the capital reduction account. And since capital is reducing, I will debit share capital account with rupees 30. Right? So your capital paid up value got reduced by rupees 30. And that is a profit to the company. What I mean to say by the paid up value, the value which is displayed in the balance sheet. और बैलेंस शीट का अगर लाइबिलिटी का अमाउंट कम होता है तो कंपनी के लिए क्या हो जाता है? प्रॉफिट. सो इट विल बी क्रेडिटेड टू विच अकाउंट? कैपिटल रिडक्शन अकाउंट. I just hope you understood this. Paid up value got reduced. So friends, face value will remain same. Earlier paid up value was 100. Now it is 70. So company is free to make a further call of rupees 30. So there is an arrangement between shareholder and company. So they reduce the paid up value. Next possibility is that face value has been changed and paid up value also has been changed. That is, suppose my share is of rupees 100 each, 100 paid. In future face value is to be made 70 rupees. Now the thing is that earlier I paid 100 rupees, face value was also 100, so share was fully paid. That capital will get cancelled. Share capital of rupees 100 account debit. In place of that, I will credit share capital of rupees 70 account credit. The difference amount of 30 I will transfer to the capital reduction. So here face value is changing. Sir, in absence of information, we will follow that there is a reduction in the face value and not a paid up value. Right? So that is what we will follow in all our solution. Next, if you remember, I mentioned you that you will learn compromise or other arrangements. Compromise in the sense I told you that reserves belong to the shareholder. Now shareholders are requested to leave that right on the reserve. So reserves can be used in your reconstruction scheme. Reserves can be used in your reconstruction scheme. So reserves account will be debited and it will be credited to the capital reduction account. Importantly, you need to take a permission from the shareholder for this, because this profit ultimately belongs to whom? Shareholder. So my entry will be reserves account debit to capital reduction account. Next possibilities, next is what? Liabilities के साथ compromise किया. There is a compromise with the liabilities. Say for example, I am supposed to pay my creditor. Amount is 10,000. Possibility is that I may ask him to take some amount now and to waive some amount. I may pay him by cash, I may pay him by check, I may pay him by the way of shares. That is also a possibility. So when I settle this liability, simple, my entry will be liability account debit to cash or bank account if I pay in cash, to share capital account if I pay by way of shares, and whatever amount is foregone by him will be credited to the capital reduction account. Next possibility, rather next compromise, increase in the value of asset. Asset का वैल्यू सपोज मेरे बैलेंस शीट में दिखाई दे रहा है 80,000, but its realistic value is not 80,000, it is 1 lakh. So I will appreciate the asset which is a profit to the company. So my entry will be asset account debit to capital reduction account. Asset account, when it is debited, asset value get increased. Continue. Next, sometime it is possible that asset is shown in the balance sheet at a different value, but actual value is less. Say for example, in my balance sheet I have mentioned machinery of rupees 1 lakh, but its actual worth is 70,000. So it is important for me to reduce that value, or if I reduce the value of the asset, it is a loss. It is debited to which account? Capital reduction account, and it is credited to the asset account. In this entire scheme, I will debit and credit only capital reduction account for any gain or any loss while doing the any transaction. Let us see the next. It is surrender of shares. Sir, what is surrender of shares? Surrender of shares means shareholders voluntarily returning their shares to the company. They know that company is in a bad patch. I am having 1000 shares. As per the arrangement, shareholders agreed to return 30% of their holding. Means out of 1000 shares, I will surrender 300 shares to the company. Now if you think as a company, you are saying that your share capital is getting reduced. So share capital account debit, and it is credited not to the capital reduction account, it is credited to the something called as a share surrender account. So my entry will be there, share capital account debit to surrender account, share surrender account. Now importantly, these surrendered shares company cannot issue for cash consideration to anyone. So surrendered shares cannot be given away as for a cash consideration. Those shares can be used only in settlement of liabilities. When I reissue those shares in settlement of liabilities, my existing entry will get reversed. Means my entry will be share surrender account debit to share capital. Importantly, I want to mention here that while surrendering the share, it could be equity shares, but while reissuing, it could be a preference shares also. So there is absolutely no need. You have to just check only the amount. So while surrendering, it could be a equity share, while reissuing, it could be a preference shares, but changes of preference shares to equity share will not be counted, will not be considered in this scheme. So in this scheme, while reissuing the shares, it could be a preference shares, it could be a equity share. There will not be a separate entry for converting equity shares into preference shares. No. In case of surrender, when you surrender the shares, means you have given away your property. Now company will decide that equivalent share capital can be reissued in settlement of liability or not. By whatever way they want, they can reissue, but they cannot reissue the shares for cash consideration. Friends, when I issue my shares, when I issue my surrendered shares for settlement of liability, my reverse entry will absolutely come. But don't you think to that extent my liability gets settled? So whatever amount of liability gets settled by reissue of surrendered shares, that liability will get cancelled, because I am not paying from my pocket, I am paying from somebody else's money, that is money of my shareholder. So here liability get cancelled, for you it is straightaway profit. Whatever is settled amount, I will say liability account debit to capital reduction account. In this way, liability will get cancelled. Sometimes it is possible that shareholders have surrendered, say for example, 1 lakh worth of shares, but you have used only 70,000. So remaining 30,000 we will transfer to the capital reduction account. So unutilized share surrender account will be closed at the end, and it will be transferred to the capital reduction account. So my entry will be share surrender account debit to capital reduction account. So surrendered shares, if it is not utilized, at the end of the scheme it will be transferred to the capital reduction account, and that amount we can use to set off our fictitious assets and losses. Now friends, we are coming toward the end of our discussion. Capital reduction account we have prepared to implement the scheme. Whatever profits are generated, those profits can be used for the specific purpose. So capital reduction account can be used only for the purpose for which it is developed. Now just try to recollect. In the beginning of my session, I told you that your company is loss making. Your balance sheet is not showing true and fair view of the business. Your assets are highly overstated. There are many of the fictitious assets. There is a goodwill which is lost value. So here I will take the advantage. To the extent capital reduction account is available, I will write off those assets, and when I write off those assets, I am using my profit which is available in the capital reduction account. So my entry will be capital reduction account debit first of all, to profit and loss account, which might be a debit balance which is written off now. I may also write off other fictitious asset like a discount on issue of shares, debentures, etc., underwriting commission, etc. Sometimes even goodwill will be written off, because assuming being you are a loss making company, goodwill has no value, but here question will specify that. I will write off goodwill also to the extent possible. Sometimes question will give you indirectly. They will give you that machinery is highly overvalued. So we have to understand that machinery is overvalued, but I don't know by what amount. So to the extent capital reduction account available, I will also write off my machinery which is heavily overvalued. So machinery account also will get credited. Once you write off these things, your purpose of the scheme get over. You need to close your capital reduction account. Importantly, capital reduction account is the account which is opened only for the internal reconstruction scheme. Whatever assets you are going to write off, that write-off cannot be more than the profit generated by you. So capital reduction account will never show you a debit balance that is a loss. In this case, you are making somewhere some logical mistake. Whatever profits are generated, maximum to that extent, you will write off the asset. Suppose you have completed your write-off and now still there is a balance in your capital reduction account, which is a credit balance. That profit is not going to occur every now and then. So it is a capital profit. So at the end, capital reduction account is closed and it is transferred to capital reserve. So my entry will be capital reduction account debit to capital reserve account. So in this way, I have completed important entries which are there for your internal reconstruction. To understand it better, I wish that you please see our problems on internal reconstruction for a better understanding. Friends, in this discussion, if you have some doubts, if you have any queries, please put in our comment box. We'll try to resolve your queries at earliest. Then to thank you, and before I close the video, I request you to share this with your friends so that they will also get benefit from this. Thank you, student. God bless you.